2.
So we're about to meet with the lending decision manager. Think we're going to get approved?
I doubt it. Have you seen the attitude of this person? Do you think this loan will be approved, first of all?
Of course it will.
No.
What do you mean no? but wait. I know we had some credit issues. But
I feel
why
like,
not?
hey, listen, this loan is a good loan.
I can explain.
This is a good file.
We paid those medical collections. We paid off all of those collections and everything.
Look, if you don't approve this loan, I know a great local Chinese place in town. Hello, my name is Barry Horvath, and this is Moving Forward TV, your local market update.
And I am DeLynn Gaston. Thanks for joining us today. No is what the lending decision manager says.
Listen, for those of you who know me, they know that I'm just not a cat person, so now
That was funny and you know it.
No. Sometimes I'm sure everyone feels like that's what you're dealing with when you're trying to get either
a loan of any kind.
A car loan, a credit card,
Right.
or in particular,
mortgage.
the mortgage,
Right.
considering the market today and what the real estate market.
No. But the good news is, we're here to share today.
There's good news outside of that cat.
I love that cat.
She does.
Anyway.
I could go without.
The good news is, the hot topic in the news these days is that Fair Isaac and Company, FICO, everyone knows them by.
Can you spell that?
FICO, is recalibrating some of their credit scoring models. And that's what the article said.
For the better?
And that is going to make an enormous difference for the better for a lot of people.
Rumor on the street is that FICO, it's actually not a rumor, it's a fact. Actually, it's effective, I think, in September.
It's coming up in the fall, right?
Yeah, so basically they are going to weigh less on your medical collections on your credit. So I think more people with this in place will qualify for a loan that maybe didn't before that had medical collections.
It's about time. Basically what, and this is another positive thing from the CFPB, and I know a lot of people do some ranking on them, including us.
No. We never pick on them.
But in all honesty, they really are trying to make some positive changes in the entire lending industry.
Did they pay you to say that?
No, I'm trying to be positive here. Stop.
Sorry.
Anyway, one of the things that the CFPB has analyzed over the last couple of years and they've looked at is there's people out there who have very good credit and you pay your bills on time and things like that, and then all of a sudden, something unexpected happens in life. A child, in football like mine, perhaps gets an injury and you
should see the bruises on her son's arms.
They even said at the Boys and Girls Club, Cage, is everything okay?
Yeah,
expecting knock on the door soon. Anyway, so they decided that in looking at everyone's credit, they have these bills and then all of a sudden something happens, you end up in an emergency room, you have insurance, you give the information, your child goes home in a cast, and everything is good, and you assume your insurance company took care of that, and then they didn't. So people, people have no idea because the hospital doesn't keep on giving you notices. If something doesn't get paid, it just goes to collection.
Unlike your credit card company or your car company,
who doesn't stop calling you,
or even your mortgage company, they won't leave you alone. Yeah, your medical collections.
You're a day late.
It's like, you didn't pay this bill.
Okay, collections.
See ya. Next thing you know, you have a collection. Your credit score drops
plummets sometimes.
25, 50 points, like overnight.
Right.
And you had no clue that even happened. You
Right.
thought the bill was paid, like you said.
So the CFPB said, okay, fine, this is not really a good indication
Did they really
of this
say,
person.
okay, fine?
Maybe not. This is not a good indication of how this person pays.
I just want to understand here.
So they're making some changes. Now, when we say Fair Isaac and Company is the one making this, keep in mind there are 3 major credit repository
Yes.
institutions: Equifax, TransUnion, and Experian. And FICO is Experian.
Yeah, FICO is the ringleader. So
Right.
normally what happens in these situations, you like my disclaimer, normally,
Yes, I know.
the other bureaus will probably file suit after this all occurs.
But not yet. FICO so far is the only one making the changes.
So this is actually wonderful, wonderful, wonderful. Did I say wonderful?
Enough times. Yeah.
Yes. News for...
Okay, Jimmy Stewart.
Hi, wonderful, wonderful. Leave me alone, okay?
No.
Go back to your cat. This is really good news for people who may be applying for a car loan, a mortgage loan, credit card, anything like that, and maybe have some medical collections. So,
Right.
And now the other part of
And this is why they say that you always should
Excuse me.
check them too.
I was
Sorry.
not done.
No.
Just feel free to walk on me. Go ahead, it's all yours.
What I was going to say is that a lot of people don't
Really?
even know.
I didn't know that.
This is why you need to check your credit every single month, or get on one of those programs that you check it.
Yes, and they also are saying now with this new system that's going into place, once that collection is paid, it goes away. Like it no longer impacts your score at
Right.
all. So that's awesome.
And what a lot of people aren't aware of is when a medical collection, or actually any kind of collection, a utility collection or something like that, when a collection goes onto your credit report, it can stay there up to 7 years. And people don't think so. They think that as soon as it's paid, it's gone. No, it stays
No.
there. And sometimes when these collection agencies, and everyone has experiences, sells from like one collection agency to another collection agency, now the clock starts ticking again. That's probably not legal, and we're going to have an expert on here, hopefully coming up in a couple of weeks.
We
who
always
can
have
kind of clear.
experts.
I know who
I
can
thought
clarify
we were-
this up.
I thought we were the experts.
We are in our own minds.
That's true.
But anyway, so even if it's any kind of a collection, under the new model, as soon as it's paid off, it's not going to impact your score anymore, which is fantastic news.
Well, according to Greg McBride, who is the chief financial analyst from Bankrate, so there's my disclaimer, this is what he says, that if your credit's already bad, that this is not going to help you at all.
Right.
So if you suck, you will continue to suck. Did I say that live?
Really?
Sorry.
You suck,
Listen,
you're
you
gonna
bring a
continue
bad cat on the show, I'm going to tell you the way it is, okay?
This is a stepping stone in the right direction. You can say things like that.
Yes. So, so those are just the facts. So.
All right. So the people
Anyway.
what he basically is trying to say that
not what
they're
I'm
saying
basically trying to
they're
say.
saying
I
that
said it.
the medical part is going to be a swing of about 25 points or so, which is big.
Right.
In some people, it could make the difference between, the minimum credit scores for a lot of mortgage lending anyway is 620. So this could put you over.
Right.
If you're at a 615 right now, this could be, get you over that limit. But if you're at a 675 right now, it could bring you up to a 700, which could get you a better rate. Or
25 points
bring you down
is what
to
they're
a 650.
saying. But who knows? It's one of the 8 wonders of the world is the credit bureaus and how they actually report and how do you really get a score.
I know.
It is a wonder. So they're saying like 25-point impact could be what to expect maybe if you no longer have that medical collection hurting you.
You're going to make me put my glasses on because we do have some interesting statistics here about the number
Outside
of people.
of the cat?
Yes, outside of the cat.
I want to know.
According to a study by the Urban Institute, 35% of Americans have debts that are unpaid bills and that are in collection right now. So 35% of Americans have collections on their accounts.
Right.
And of those, almost half are medical. So
50% of all those collections are medical related. So they're not because you just didn't want to pay your credit card bill or you missed it or you skipped out on your car that broke down because you didn't want to pay for it anymore or you were upside down on your house, it's truly because it was a medical collection,
right,
and you didn't even know that it wasn't paid.
And right now it's being scored the exact same way. A medical collection that you may perhaps didn't even know about because you thought the insurance company paid for your kid's broken arm, and didn't.
I feel bad for your kid because you're really,
and then,
don't say that.
And then somebody who just like walked out on, a utility bill in an apartment, or, walked out on, didn't pay, what else do we see on collection accounts? Some sort of thing, a credit card or whatever it is. They just opted to not pay it. Right now, those two are being
cell phone bills.
Right, cell phone bills on the, so
it's
those
not
are being
get you out of those,
the same way right now.
So finish your contract.
So hopefully with this new scoring system, they shouldn't be the same way. If you didn't know about a collection, you would normally pay it.
Listen to this number, it's astounding. As of July, about 64.3 million consumers in the U.S. had a medical collection on their credit report.
64 million.
Yeah, million. That's a lot of peeps.
That's a lot of peeps.
No wonder the cat keeps saying no, because they're weighing that so heavily. So, yeah, this is.
And more than half of those have no balances on them, but it's still impacting their credit score in a negative way. So this is some great information that's going to happen pretty soon, some changes that are coming up, and we're excited to see them happen.
You're excited. Well, we should be excited, because
now,
I think
they did say that it is going to be a little bit lagging. It's coming this fall is when the changes are going to go into effect. And normally the credit card companies and the auto dealerships and stuff, they usually make the changes first. Other long-term creditors like mortgage lenders are a little bit later.
Okay. So we're going to go to break, and we will have some more information on this. We'll be right back.
This is one bee that loves going to the dentist because it's made for you and me.
My name is Dr. Becerra from New Tampa Pediatric Dental. Providing a comfortable atmosphere in early dental care gives kids a great start for healthy teeth and gums for life.
When I go to Dr. B, they don't do anything to hurt you.
I used to be afraid, but I'm not now. I'm not afraid of the dentist anymore. I love to see Dr. B.
Call New Tampa Pediatric Dental today.
Revolutionary in his field, Dr. Bonatti created, perfected, and patented the Bonatti spine procedures. Using his genius, Bonatti invented precise tools necessary to minimize surgery, scarring, anesthesia, and recovery. So successful are the Bonatti spine procedures, they consistently reflect over 94% patient satisfaction. 45,000 successful procedures have been performed exclusively at our location. Nearly half our patients suffer from failed back and neck surgeries at other facilities. Bonatti succeeds where others fail.
This is one bee that loves going to the dentist because it's made for you and me.
The environment here is really kid-friendly, family-friendly. The parents are welcome to watch.
It's definitely been a different atmosphere since Dr. Becerra has come on. It's very inviting and welcoming, and the children just enjoy coming here all around.
My middle son did not like to come to the dentist, but now he loves to come to the Beehive.
You don't have to be afraid to go to the dentist.
Call New Tampa Pediatric Dental today.
Mortgages don't need to be complicated. At Norcom, we're here to guide you through the process. By following our tried and true path to success, we make homes happen. To get started, give us a call or apply online. A trusted mortgage consultant will reach out to you to find out what your goals are. Whether you're in the market to purchase a new home or refinance your current home, we are dedicated to helping you achieve your goals. At Norcom, we'll provide a best-in-class customer experience. Once a plan is established, your mortgage consultant will analyze your income, assets, and credit profile in order to customize a plan for you. If you're planning on moving in the next few years, we might suggest an adjustable rate mortgage to be the best option for you. If you're a veteran, we'll get you started on a VA loan with 0% down. And if you're thinking long-term, a 30-year fixed loan might be your best fit. Our professionals are up to date on market trends and will help you make the best decision in choosing your rate. After we've found the program that's best for you, we'll then need to collect some information, including pay stubs, bank statements, and tax forms. Our underwriting team steers a loan through the approval process to verify that all the information you've provided is correct. As the underwriting process is taking place, an appraisal is ordered to determine the value of your home. A professional, local appraiser specializing in your area will determine the home's value. The last leg of this journey is closing your loan. While taking care of any last-minute details, our closing team will work on scheduling your closing date and location. It's that simple. Thank you for taking some time to walk through the mortgage path with us. Remember, we're always here to answer any questions you may have. It may seem intimidating, but here at Norcom Mortgage, we make homes happen.
This is one bee that loves going to the dentist because it's made for you and me.
Providing a comfortable atmosphere in early dental care gives kids a great start for healthy teeth and gums for life.
Coming here, you're not just like an ordinary patient. You're actually like treated like a family member, and like you're treated like he actually gets to know you and makes you smile.
Welcome to New Tampa Pediatric Dental, and we are the Bees!
Call New Tampa Pediatric Dental today.
Hi, I'm Derek Brooks, former linebacker for the Tampa Bay Buccaneers. During my NFL career, I realized the importance of giving back and started my foundation, Derek Brooks Charities. We help Tampa Bay youth prepare for a successful life through our college prep and mentoring programs. Our goal is to see youth excel academically and develop strong characters and be better citizens for tomorrow. To further our mission, we've teamed up with Fun Night, a company that gives members access to thousands of nationwide discounts on products and services they buy every day. These include entertainment, retail purchases, dining, and travel. Best of all, 33% of every membership fee goes to the charity of your choice. We love being able to save our supporters money while giving them a unique opportunity to support our charitable work in the community. I invite you to consider using Fun Night to save money and give back to your favorite cause. Visit www.funnight.us to sign up now and get a free 30-day trial. Save money, help others with Fun Night, and support Derek Brooks Charities.
We are back.
Ta-da!
Ta-da! And we did not bring the cat this time, unless
No.
unless that cat comes.
Hi, I'm
still
Derek
think that
Brooks,
that cat's
former linebacker for the
I know. Oh, look at that. Did you see Mr.
Derek.
Derek Brooks? I love him.
He just wants so bad to be on our show.
Yeah, apparently. We got him on there one way or another. Hey, preseason football, you know.
Coming up soon, I take it?
No, it's already here.
Oh, it's here. Yeah, I know. My son's in football, remember?
Yeah, he's got all the bruises up his arms. I'm
Yes,
sure you're
he
going to have
does.
some medical collections
Yeah,
soon.
oh my gosh.
All right, so here's the news about FICO, in case you just woke up, okay, and didn't pay attention. It's changing the way...
Recalibrating.
Really?
Recalibrating.
You got some words. It's walking a fine line, basically, on what's going to be reported, not reported, how it's going to impact your score on medical collection. So what they're saying is if you have a mediocre, or I won't use that word again, like I did earlier. Sorry, I apologize for anybody offended. And your cat lovers, I apologize to you too in advance. If your credit's really bad, it's probably not going to help you. If your credit's really good, it's probably not going to really affect you that much. But where it's going to really make a difference is probably you're that 580 to 600 credit score, and now you pay off the medical collection. It's probably going to put you in a spot where instead of sitting there for 7 years, just dying on a vine, as we call
Affecting
it,
your score negatively.
it'll probably get you over to that 620, maybe 640 neighborhood that you want to be, especially if you're in the home buying market.
The other thing that they said is that in addition to the medical collections affecting your score somewhere around 25 points or so, they say that other types of collections, a collection that has a balance out there, that can swing your score sometimes 100 points. Now, who knows? Because no one knows. It's that big mystery.
Yes, it is.
As to what what actually goes into the credit score and how much and everything else. But if it swings your score by 100 points, that could be a lot.
When you say this is like they're actually loosening credit standards. I mean, they're loosening, it's basically loosening a guideline.
Yeah, which some people say is like a double-edged sword. You know, one of these people in the article put it great, and I think it's a really good way.
One of these people.
One of these people.
That's a big disclaimer. That'll get you off. Did you read
I
this
read
on the
lots of articles. I researched this. Anyway, I like the way he put it. He said, you know, having credit is like a sharp knife. It can hurt you if you don't know how to use it. Stop! No.
Oh, this is not a sharp knife. Producer, can we get a knife
anyway,
over here, please? Mr. John?
No, don't bring him a sharp knife, please. No sharp objects
I think we would,
allowed.
because we need some Chinese food, so.
You leave my cat alone. That is a cute cat.
I just have to ask you about that cat. What was wrong with that cat?
I don't know. I found it on Facebook. I thought it was hilarious.
Why does a cat say no, 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 no? I mean,
I don't know.
What is up with that?
I don't know. I don't know, but it's cute.
Apparently, it was good enough to be on our show, so it must be special and near and dear to your heart.
The cat has a job. It's a lending manager.
Apparently, yeah. So, did he approve our loan? That's the real question. All right. So here's my take on this thing. If you and this is great for the real estate professionals who happen to watch our show, hopefully all of you. Maybe you have a borrower that you were showing houses to that you shouldn't have, that didn't really qualify. And now with these new loosening guidelines coming in place, maybe in the next month or so, maybe they might be players again to potentially qualify to buy a house that didn't qualify before.
Right.
So this could be huge.
Definitely a time to reach out to them again and say, you know, there's some changes coming down the pike as far as credit scoring goes.
And they could maybe, latch on. This market's heated up, as we know. It's a seller's market, so maybe it's a good time to enter that. And I don't know what the car market is, but is it a seller's market or a buyer's market?
I have no idea.
Yeah, don't you follow
ask a car expert. No, do I follow the car market?
You don't follow sports.
Yeah.
You don't follow cars. What do you live in mortgage la la land and play with cats all day? What's up with that?
Yeah, why? You got a problem with that?
Apparently.
What's your point?
I have no point.
Anyway, the credit score changes are going to really improve some people's chances of getting a home, getting a car, establishing credit. And we're hoping, like we said before, that not Experian, Equifax and TransUnion are going to follow suit and make some of these changes. So it is a good time. If you were turned down previously for any type of credit, now is the time to go back, especially if you had some collections, medical collections, cell phone bill collections, electric company, whatever it was, or maybe even just a credit card. Now's the time to go back. See if you can't make arrangements to get these things paid off, even sometimes settled for less or whatever.
Right.
Do something to get them paid off, because as soon as they are down to a zero balance, it's not going to be affecting your credit score as much as it is today.
Can I ask you something?
Yes.
Can you think, and this is just a logical question.
Okay.
The CFPB has implemented this. That's wonderful. For those of you who know, that's the Consumer Financial Protection Bureau. Why do you suppose, with all the stuff going on in healthcare, that they focus just on healthcare debts?
Oh, how funny is that? I didn't even think of that.
Why?
That's interesting.
Why?
That's very interesting.
You don't have an opinion on this, do you?
I don't. That is, it's a long time in coming, in my personal opinion. So, because it truly isn't indicative. Somebody who pays their bills all of the time. Would you stop?
She's got all these big words today.
Someone who pays their bills all the time, on time, and the working mom and dad out there bringing their kids to school and football or whatever else, and you're making ends meet, and then all of a sudden something happens, a medical emergency comes up, and again you think that bill got paid by your insurance company, because after all you're paying your insurance bill every month.
Yeah.
And then it doesn't, and you don't know, is that person now all of a sudden your credit score plummets from a 680 down to a 580 because of that, right when you're about to buy a house. Is that fair?
Seems fair.
No, it's not fair.
Seems fair.
So finally, the
CFPB
said this isn't fair. I think consumers in general, and those of us in the lending industry, for years have been trying to get Fair Isaac and Company to change the scoring models. But
I just got a text from my friend at the CFPB.
And he says?
He says, the CFPB estimates that consumers with medical debt may have their credit scores underestimated by 10 points. That's all I got.
Thanks for sharing.
I don't make this stuff up, folks.
I know. I think everybody definitely. I think that it's going to make an impact.
What has medical got to do really with your credit score anyway?
Exactly. That's what they're saying. Exactly. That is not an indication of how your everyday, how you take care of your everyday credit.
But you were around when they first started doing credit scoring.
Are you saying I'm old?
No. It was back in the early 50s, folks, for those who don't know
Back in 1996, actually.
Was it 96?
Yeah, well, they've been doing it for car loans and credit cards and stuff like that internally, but all of a sudden, I remember in 1996, I can remember walking into my underwriter and saying to her, hey, there's this thing on here, there's this little score thing here. What is that number? What does that mean? And she said, I don't know. It's something about credit that we're going to be doing. So I picked up the phone and I called. This was in 1996, so I picked up the phone and I called Fair Isaac and Company, and they were actually very, very nice to me on the phone, and they explained.
I knew there'd be a story here.
There is. It's kind of funny. So they explained all this stuff, and I asked them all kinds of questions as well. I'm a loan officer, and if this is going to make a difference at some point in the future as to my clients getting a loan or not getting a loan, because up until credit scoring days, we just used to, we had a late payment, let's write a letter as to what happened, and that was it. Anyway, and then all of a sudden the credit scoring is making everybody's lives crazy. Anyway, so they said to me on the phone, they answered all of my questions, and finally, after about 45 minutes, they said, no, DeLynn, we are not going to tell you how it works, because then people will learn how to manipulate the system.
And wait, 1996?
And that's very true.
And it's been 18 years since this is existence, and no one has learned how to manipulate this yet?
Yes, we have. That's the whole thing. People have, and everybody knows that. Everybody knows. They sit there and they say, well, increase credit this way or lower, no one wants to lower your score, but this will make it lower, this will make it go up,
It's funny
do
you
all
say
these things.
that,
We try to manipulate the system best we can.
If you guys have pulled your credit lately online, I know even on the systems that, we use, it even tells you now, okay, here's your credit score, but here's what your credit score could be.
Right.
And now the Bureau, they sell that as an upsell to say, oh, you like this 680 score? Well, guess what? We could get you to 720. And then they want you to pay a fee to do that, to tell you how to get there.
Right.
So there are ways to manipulate the system.
And they're teaching you how to do them for the right price.
And we're willing to pay for it.
That's how much people want to, that's how much credit scores affect our lives. And it's not just in lending for mortgages or credit cards or something like that, but car insurance and things like that. And, getting an apartment when you got a young child just starting out. And, so much is our lives are impacted by credit scores. And it's a big mystery. No one knows what goes into them.
So you save money on your car insurance.
We definitely have to have our expert friend
money
on.
On your mortgage. Yeah, we need to bring somebody on. Credit is a big part of your life.
And it's a big mystery.
You think?
Anyway, that's our show this week. We appreciate you guys watching. Get the show out, and I promise you we'll give you more information about credit scoring.
And we've got all the latest. I had no idea this was even coming down the pipe, that they were loosening guidelines. So it's good to know. New news. So get out there. I would reapply for any loan maybe next month if you were denied recently, if it was a medical situation.
Or at the very least,
or at least take a look at it.
Revisit.
Or figure out how to get that score up to where you need it to be, because it could save you a lot of money on, forget renting. Maybe you could maybe you could lower other high credit card debts, these ones that went to 29.9%.
Right, exactly.
Maybe get them down to 28.8, I don't know, something like that. But anyway, get it out. Facebook, Twitter. LinkedIn. What else are we on?
YouTube.
How come we're not on that?
All over the place.
What's that other thing? Snapchat. How come we're not on that?
I don't even know that one. You're the social.
Oh, that's good. Did you hear that? We're video. This is us moving.
Oh, that's right.
Can't we have
He's thinking Instagram. Did you see that movie with Vince Vaughn, Google? Oh my gosh, that was so funny. He kept on saying, on the line. So when you get on the line, and the other kid's saying, online. You mean online?
Get on the line.
Good movie if you haven't watched it. It's the Google movie. Internship, it's called. Thank you, our producer. Thank you, hon.
At least somebody's engaged with the real world outside of credit scores and cats. So
anyway, we are today and every day
moving forward.
We'll see everybody next week. Thanks for watching.
Hopefully with better credit scores too.
Bye-bye.